Hi, I hope you're doing well. Today we are talking EFTs. Yeah, we'll be covering what they are and how they work, and then we're looking at EFT versus mutual funds. Why are they popular? The types of EFT you should know, the best one for you, the risk and the downsides, and then we're gonna look at EFTs versus stock, dividends, making passive income, then how to buy one, and then how to start investing. So yeah, stay tuned. So what is an EFT and how does it work? EFT stands for Exchange Traded Fund. How do they work? Just like stocks, right? You buy a stock for a specific company. But now with EFT, you can buy a couple of stocks from different companies, obviously, without having to do it one by one. You buy them in bulk. Take it as like a fruit of basket. Instead of just buying one fruit, you've got a couple of fruit in one basket. So it's not only about stock. You can also buy commodities. So you can have a mix of stock, commodities, derivatives. Yes, you can have shares. Shares and stocks is one and the same thing. So you can have all of them and buy them at once. So it becomes cheaper. Let's say, for example, you want to buy a stock for company 1 and company 2, and you don't have enough money. The company 1 stock is $45, the other one is, I don't know, 500,000. But now you have an EFT that can, give you the opportunity to buy both stocks at a lesser price. So that's how EFTs work. So EFTs and mutual funds, what is the difference? So with EFTs, you can just buy and hold them. They're traded like stocks. You can buy them today and wait for them to be high and sell them next week or in 2 months, right? But with mutual fund, unfortunately, they're only traded once a day, meaning that close of day, you get in the price. So unlike EFT that you can hold for a couple of days, this one you cannot hold a couple of days. So with EFT you've got flexibility, but with mutual funds it's traded once a day. So yeah, that's how EFTs. That's the difference between EFTs and mutual funds. It's funny that EFTs are the most popular investment choice in the world. And here's why. You probably might be shocked that they are the most popular in the world. And you'll notice that EFTs, they are flexible. And the reason why they are popular, obviously, stocks make them popular. So being able to buy multiple stocks at a lower price, without having to spend more. The flexibility, right? So they're very, very, very flexible. And then they are transparent as well. If you buy an EFT, it will show you how many companies are in there. What are you buying? You don't just buy stocks. You can also buy commodities. You can buy bonds. So you've got a combination of everything in one basket and buying it at a very cheap. So imagine, like if you had to buy all of them at one by one separately, then it will hammer you. So this is like a low cost of buying in bundle. So yeah, there are lots of types of EFTs to choose from. So there are those ones that are specific to stocks, which they call them stock EFTs. They've got Nasdaq, SP 500, and then you've got the bonds ones, like they are only focused on government bonds, and you got a couple of them. Then we've got sector one, who are more focused on the tech or energy, health, and then we've got international EFTs that gives you an opportunity to invest in any buy any stock in any country. And then we've got dividends ones. Those are the ones that are only focused on paying dividends, right? So those are the ones for passive incomes. And then we've got commodities, commodity EFTs. Those are the ones that are focusing on gold, oil, silver. So yeah, there's a lot of them. Yeah, or probably you can just choose a generic one whereby you can have a combination of bond, stock, and all that. Yeah, are the best for you. Which one should you invest in? So I've listed them. The top 5. You've got the VU. So this one tracks S&P 500, which is the largest in the US companies. Those are 500 companies in the S&P 500. 500 largest companies in the US. Right, and then you've got SCHD. This is great for beginners who are looking for passive income. So it focuses on US and dividend paying bond stocks with strong fundamentals. And then we've got VT. So this is obviously this for globally. If you want to invest globally, it gives you exposure of both the US and international. Then we got triple Q. So this is like this EFT is this Nasdaq. This is for tech giants like Apple. Under Nasdaq, you've got Apple, you've got Amazon, you've got Microsoft, you've got Google. Yeah, this is high growth potential EFT. Little bit risky, obviously. And then this is for BND. This is BND. This is just for cautious investors. Little bit of exposure in the bond market. Yeah, it's useful for balancing your portfolio. So yeah, I mean, like, just like there are benefits in EFT, obviously, to be real, I mean, like, nothing is risk free, right? Obviously, the risk that you should probably know is that since it's an EFT, you've got more than one company, right? So meaning now, if let's say you buy an EFT of maybe let's say you buy SP 500, which is like 500 largest companies in the US. If 300 of them are underperforming, that means it will affect your overall EFT, right? But it's a little bit safer. But I think obviously if majority of the companies are within the EFTs are really going down, they affect your entire EFT. So yeah, that's the risk. So EFTs versus stock, which one is better? This is more like asking a question of, should I hold one stock or should I hold a bundle? Holding a bundle of stock versus one stock, which one is better? For example, if you had to hold one stock, you're looking at high risk to reward, right? So if the stock goes up, you're making a lot. If it goes down, unfortunately, you lose. But now, if you have 5 stock and one stock goes down and 4 goes up, you're in a gain, you're in profit. So if you had to ask me, should you buy single or individual? I'll say EFT is always better than buying an individual stock. Buy a couple, diversify investment. Then you're a little bit safer, right? Obviously, the returns are not gonna be as high as individual stock, but at least the risk is less. So if you wanna earn passive income using EFTs, you gotta go dividend EFT, right? So those are the EFTs that are holding group of companies known for paying regular dividends. So yeah, I mean, what I like about it, obviously, since it's an EFT, it's there's multiple companies. It's not tied to one individual company, so there's multiple companies. So you just have to look for the dividend EFT, which they are the ones who are meant for passive income. Like, they always pay dividends. And then yeah, and then you've got like sort of option to reinvest. Yeah, those are the ones that you should look for. And then some of the popular ones is SCHD, and then there's another one that says VYM. Obviously, I've listed them. You can just see them, and then the JP Morgan. So yeah, should you buy EFTs in a bear market? But before I dive in, what is a bear market? Bear market simply means that you're buying an EFT that has dropped by over 20% or more, right? So, and bear market, obviously it creates fear because people thinking that, okay, this EFT is dropping, so I should be buying. But it can be an opportunity to buy EFT at a cheaper level, and then if it then eventually goes up, then that's where now, you know, at least you're making a bit of a killing. But obviously most of people don't like to buy you know, EFTs that are showing a downfall because their fear of, like, you know, it might continue to go down. But for some people, when EFT goes down, it's an opportunity for them to buy, so it's up to you. I think I've also listed some of the brokers that you can use to open an account, but it's up to you to look for a brokerage account. So I'm not gonna post them because I think if you can go through my videos, I've posted them, I think, from the first to the fifth video. Yeah, so there's a couple of brokers that you can use, but first thing first, you're gonna need a brokerage account. Then after open that, obviously then you need to fund your account depending on the minimum of the brokerage, the minimum deposit. And then it's up to you whether you go for short term, you go for long term, you go for the one that pays monthly, the dividend one. And yeah, then you place your order and then you stay consistent. Thank you for taking your time in watching this video. If you're new to this channel, please don't forget to subscribe. As well, please don't forget to leave your comment below. If there's anything that you want me to talk about, if there's any misunderstanding or clarification, you can put it in the comments below. And then in my next video, I will be talking about tax-free investment. So yeah, I'll be posting the video soon.